Inflation below expectations. We got 2 weeks with economic data indicating the economy's cooling. Got 2 weeks with mortgage rates kind of easing here. We're not out of the woods yet, but I'll take a little bit of progress. What does this mean for the Connecticut real estate market? We'll talk about that in a second. Also got an update from Branford. The renovation's going along nicely. We've got the kitchen gutted. We've replaced those fire-damaged floor joists. Now we just got to get some water and power in there, and we can get everything else going. I'm Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's November 17th. Let's talk about some key Connecticut market stats. Got active on the market, 4,587. That's down 26 from last week. We had 285 new listings over the last 24 hours, and we had just over 3,200 closings in October. That puts us at about 1.4 months worth of inventory, so we're still in a very low inventory position. Not too much has changed there. We got some key dates here. The CPI and PPI reports this week, they did us right. They both came in lower than expected, which is great news. The result was seen in the stock market and in mortgage rates. Mortgage applications, they picked up another 2.8% for the week ending November 10th. So the week in November, ending November 3rd, we saw the trend reverse from a downward trend to start moving up. And now we've seen that trend start to get established with a second week in a row with mortgage rates or mortgage applications going up. More mortgage applications means more buyers in the market, which means more demand for houses. We have just under 4,600 houses for sale on the market right now. Inventory is still very low. Now, on the other hand, housing starts across the U.S. up 1.9% in October. That's a year-over-year number, and it's more than what was forecast. So maybe a little bit of good news for the inventory. It's going to take some time to get there, but we got to start at some point. PCE, which is the Personal Consumption Expenditure Index, is another measure of inflation. That's due out at the end of the month. The Fed meets on the 12th and 13th, and the November CPI and PPI reports also come out on the 12th and 13th. Current data indicates the economy seems to be slowing down. While it's not desirable from an income perspective, it is favorable for mortgage rates and real estate. What do you think is going to happen in the real estate market and with mortgage rates over the next month and a half or so as we get towards the end of the year? Comment down below. Got a couple of new reports out. This is the forecast for home prices for 2023, the rest of 2023, and into 2024. You can see Fannie Mae, NBA, which is a Mortgage Bankers Association, and NAR, which is a National Association of Realtors, are all predicting home prices up. Fannie Mae is a little bit more optimistic than some of the others, but on average, for 2023, they're seeing 2.8% and 1.5% for 2024. So we are seeing a little bit of cooling down. We're not going to see 20% per year price appreciation, but we will still see things going up. The important thing is nobody is predicting to see prices go down. There will be a market here or there that will be down and a market here or there that will be way up. For example, Connecticut right now is over 8% up for 2023 so far. So that's certainly outperforming the forecast that we have right here. For total home sales, 2023, they're forecasting 4.8. We're pretty much done with the year. That's probably a pretty good number. But the important thing is 2024, they're seeing that we're going to sell about 5.2 million homes. So that is an increase from this current year. Another indication that the real estate market is still going to be fairly healthy. There's really no data out there showing that there's going to be any kind of a crash. It's not something, unfortunately, that's going to happen. We're going to see slow, steady growth in prices, and that's going to continue until we get to the point where we have more equilibrium in the market as far as supply versus demand. Talking about the primary mortgage market survey, you can see here we had another couple of wins for real estate and mortgages this week with the cooler than expected inflation reports. Mortgage rates are at a 2-month low. While that's a small victory, it's a lot better than mortgages rates at all-time highs. I'll take a little bit of a win here, and got to think positively. The next expected catalysts for mortgage rates are going to be that PCE report and then the Fed meeting, which coincides with the CPI and PPI coming out. I expect that mortgage rates are going to stay in the low to mid 7% ranges until at least then. Hopefully I'm wrong and they drop more. We'll see what happens. The Fed, for their meeting, they are keeping all options on the table. That being said, the markets and investors have pretty much penciled in there's not going to be a rate hike at this next meeting. It seems like, based on the data that we're seeing, the previous rate hikes are finally starting to have a significant impact on the economy. So there's no point in hitting again if we're actually starting to see things go in the right direction. So we got just over 2 weeks into the renovation out in Branford. Here's some videos so you can see what we got going on.
It's late and the lighting sucks, but took down the entire kitchen, took the paneling off the walls, the faux brick tile, and this is the new floor. All the beams have been replaced. I'll get a shot of it. We're down below. You can see the new beams there. Same burned electric system. Those beams are just blackened and are not actually charred. You can see that we had to replace a whole bunch of beams. Good as new. Good comparison of old versus new. You really see how much it was burnt.
Pretty exciting. We hope to have this wrapped up by the end of the year. Hopefully this video has been helpful for you. If so, please like, subscribe, ring the notification bell. And also, just check out my channel. I've put out the first part of my 4-part series on the home buyer experience. There's a link down in the description. You can check that out. Comments, questions, and feedback are always welcome. Have a great day.